And welcome back, welcome back, welcome back to, well, it's supposed to be Back to the Futures, but we're going to do something special here today. As you can see, we've got our good friend, that handsome fellow, Mick, with us here today. Mick, how are you today?
What's up, Eddie? I'm doing really great. I'm excited for the holidays. It's Friday. It's been a heck of a week this week. Lots going on in the markets and with our traders and just everything else, but I'm good. I'm good. I'm happy to be on here with you and with all of our viewers for Ask a Risk Manager Anything.
Anything, anything.
Anything and everything.
Well, you know what, Mick, real quick, risk manager. What does a risk manager do?
Yeah, the risk team monitors all of our funded traders. We're looking at people in XFA. We're looking at people in the live accounts. We're working with those funded traders. We want people locking in money and on profits, and we want people limited in the downside. So we'll have conversations with our traders about those things. We're also the team that calls up people from the express funded accounts to the live account with our prop firm. So we're always looking for great talent to call up, and we do a pretty good job with that.
Beautiful, beautiful.
Yeah.
All right.
Yeah.
Well, let's get busy here. Got a lot
Let's
of
do it.
questions here. All right, Mick. This one's from Stay at Home Dad. He says, is doing risk analysis every week useful, and how best would one get about doing that?
I'm assuming it's related to trading, and you have to do your risk analysis on a per trade basis, on a daily basis, a weekly basis, that kind of thing. Sounds like a pretty broad question, honestly. But you have to, I mean, that's when you're placing trades, even if it's a micros contract, you're assuming somebody else's risk. And anytime you're pulling the trigger or clicking the mouse on that, it's always risk analysis. What I'm risking $100 to make $400. I'm risking $1,000 to make $5,000 kind of thing.
Right.
So yeah, you're always any exposure you have in the markets is real risk.
Okay. I appreciate that. Next question is from Trader Survivor. Mick, I've been good for 2 months. And let Santa Claus know that. He's been good for 2 months. Also received emails from you talking about my performance. You could consider for me for the live account. I've been funded many times. I can't have been. Let's see if he's writing this. I can't even fund it anymore. Do you have any advice? All right. So this trader's been funded before and wondering why he can't get funded now.
So his trading's not working out well. I'm not so sure on the
He's been trading
question.
good for about 2 months. Received emails talking about his performance, and he wanted you to consider him for the live account. Been funded many times, but can't get funded anymore. Do you have advice?
Well, we're always looking to call up traders from the express funded to the live account. So I'm not sure about the can't get funded anymore piece of it, but to have the trader submit his name, I'll take a closer look.
Okay, let's move on. Question number 3, Raul.
I hear I've got a robo voice. Am I coming through okay on the production team? Does this sound all right now?
Okay.
Okay. Should I back up? All right. Can we zoom in on the camera then, at least, so I'm not so far away?
You got
All
some
right.
new
Thanks,
shoes
guys.
there, I see. Wow.
Old shoes, keep them squeaky clean.
Keep them squeaky clean. I do that too. I use that spray bleach. They come out looking really white.
Just a
Nice.
little water and a rag will do the trick too.
Okay.
What else you got for me, Eddie?
I got Raul asking, I use EMAs and VWAP to trade the 2-minute and 5-minute, but I get paralyzed by the price levels that seem important and miss out on great trades. Any tips on how to clean up my charts?
Oh yeah, if you are looking at a 2-minute chart and a 5-minute chart, you are looking at the market under a microscope, and you're going to be missing all the big important price levels. Take a top-down approach would be my suggestion. Start looking at the daily chart, then break it down to lower time frames. If you are looking at those shorter time frame charts, in my opinion, you're trading noise, and you're missing out you're missing out on the bigger levels that everybody in the world's looking at: swing highs and swing lows, previous day's high and previous day's low. All these important price points in the market are getting missed because you're only seeing a small window of time on your chart. So if you are going to continue looking at that short time frame for your trading execution and implementing your strategy, do have extra charts up, of higher time frames where you're not going to miss those things, and you will see those. It's a really great question, and it's a very easy solution, something that is easily fixable.
All right. Thank you, Mick.
Yeah.
Next is Tracy. Tracy's got a question. Hi, Mick. Enjoying my Topstep first week, first combine. For newer traders, about 1 to 2 years trading, are there certain times of the day when a newer trader should avoid or sit out? Thanks.
Absolutely. I have a strong opinion on this. For newer traders and just traders in general, the overnight session, I do not like that. Markets open up at 5 o'clock Central Time and trade till, 4 o'clock p.m. Central Time. I don't like the overnight session. There's low volume, low participation there. The big boys and girls who are market participants and all the institutions, they're not really, I mean, there could be business being done in the overnight session, but take a look at the volume and the time of day. So we're in Chicago here, so I'm on Central Time. I think the best window for any day trader is going to be when all the participants are there involved. You have the big money that's actually moving the market around, be it aggressive buying or aggressive selling. That's from 7 a.m. to 11 a.m. Central Time, Chicago time. I think that's where traders should be, looking for opportunities and catching a piece of the trend for the day. In addition to kind of sitting out in the overnight session, I don't like trading, when the stock market opens too. There's a lot of pushing the market around back and forth. I think the stock open at 8:30 Central, 9:30 Eastern is a really good time to sit on your hands and see, how things kind of play out during that opening range. And then also, I don't like really afternoon trading. If you're looking for continuation in a trend, probability of continuation in the afternoon goes down. So you have a higher percentage chance of catching, the trend for the day there. And then also the close too. I like staying away from the open, the close, the overnight, and then afternoon. If you're already up money in the afternoon, I think you should scale down your position sizing. Don't risk as much of your cash if you're up money on the day. And then certainly if you're down money on the day, I would walk away, and call it a bad day come the afternoon session.
All right.
Great question. And again, that applies for someone who's new to trading, 1 to 2 years, or I even think, from the conversations I have with people in the industry that do well for themselves, that's kind of their take on it as well. So that's kind of a general consensus, honestly.
All right. Thank you, Nick. Thank you, Tracy. Jean-Yves, got a question here. What is the volume profile indicator you use on your trading view chart?
I don't use trading view charts, and I don't use volume profile. I think volume at price is very important. Myself personally, when I'm looking at the charts, I keep it pretty simple as far as the indicators go, and I like looking at congestion areas where you have points of control. It's basically similar to market profile, but you just are looking at the chart for it as opposed to time brackets off on the side of the chart. And that just shows, areas that could be magnets, areas that could be, points of control, or what would be in hindsight support or resistance. So I like looking at congestion areas. I don't like using the term support or resistance because you don't know if it's support or resistance until it either is support or resistance. So you can use that in hindsight, talking about that level was support back then when we traded there, or that level was resistance. But just because I don't use those indicators doesn't mean they're not valuable. Everybody's got their own indicators and stuff like
Right.
that, and I don't put too much value in any indicator. I like looking at daily price structure for my stuff.
Thank you, Mick.
Yeah.
Next question's from Henry. Mex, what's your ideal risk to reward ratio for trades?
That's a great question, and I know our viewers might hate it when I say this, but that's not a one size fits all answer. I don't think I'll start here. I don't think that 1-to-1 is a great risk reward ratio because you have to be right the majority of the time in order to actually be profitable. So as you move to a higher risk reward ratio, you're talking 2-to-1, 3-to-1, 4-to-1, hell, 20-to-1 could even be, an opportunity there too. You play a little bit with the math. If my risk reward's 4-to-1, I don't have to be right all the time to be profitable, or I don't have to be right the majority of the time to be profitable. I threw out that 20-to-1 risk reward ratio. I don't really see that being something that's necessarily realistic in day trading, but it certainly is if you're playing a higher time frame and you're trading something like crude oil when it's at $70 and you can think it can go to $80 or something like that over a period of time. But try and stay away from anything where your traders. I think there's a statistic out there that says the best traders are right about 60% of the time. So if I'm only right a little over half the time, I got to have a 2-to-1 risk reward ratio at the very least. The higher risk reward ratios you're seeking out will probably narrow down the number of trades that you're actually taking during the session. And that's not a bad thing. I talk about it in Shoulder Tap all the time. We have these traders who have very, very high win rates on their trading accounts. And that's pretty common with the people that we actually call up from live accounts. I know we don't have the trader metrics queued up right now, but I mean, typically and on average, these win rates in the XFA to live call ups, it's just under 80% winning days. So most of those traders are relatively selective with their trades. So do try and at least, to back up to the question, do try and at least be looking for 2-to-1 at the very least.
I like that one. Next question is from Kuhn. How do you do sizing with XFA? How much max loss day and target for you? What do you do with a day chop and no volume? So let's go with that first question. How do you do sizing with XFA?
Well, sizing with XFA should be the same as trading combine, should be the same as a live account. Just adding size is, my rule of thumb is don't add to losers. That's cannonballing. Add to your winners. When the market is telling you that your directional bias is when the market's going in the direction that you want it to, that you took risk on, add to it. As the market's telling you you're right, add to it. But there's something very important about adding to winning trades. There's this thing called pyramiding and reverse pyramiding. And what you want to do is be pyramiding and not reverse pyramiding. Think about the shape of a pyramid, upside down or whatnot. And, if I'm someone who trades 10 contracts, for example, I might enter, and that's my max position size, or that's my unit sizing, whatever you want to call it. I may not enter that market with 10 contracts. I might buy 5. And then as I'm being proven right and the market's going in my direction, I'll add 2. I'll add 1. I'll add another one. And that's kind of pyramiding. I start with a larger size, and as I'm being proven correct, I add smaller size to that position. Why you want to do it that way is because your core average price is going to be favorable. Whereas if I don't want a reverse pyramid, let's say I start out, I can trade up to 10 contracts, that's my unit sizing, and I buy 1 or I buy 2. and then the market starts moving in my favor, and then I start adding, 3 contracts and then another 3 contracts. That's reverse pyramiding, and it's raising my average price as I'm buying that. So while I had the right idea where I got in and my initial entry was good, I've added more contracts at a higher price, which means my average price is now increased. And even if I'm right, it might be a little bit easier for me to get shaken out of that position, because now my average price is much higher than it was where I first got into the position. So only be adding to positions. And I talk about it in shoulder tap, like you should not be putting a trade on without framing out the trade, knowing where you're getting out if you're wrong and knowing where you're getting out if you're right. And if you have that all framed out, as it moves towards your profit target, add a little bit to it. You want to put the gas pedal down when it's working and when the market's going in your favor, and you want to be pumping the brakes or peeling off contracts when it's going against you.
I like that, and write that down, because that is a recipe for success. You need to
Yep.
realize when, hey, you know what, market isn't my buddy today. Or you need to realize, hey, you know what, I got a good friend in the market here today. This is what I need to do. Good stuff, Mick. Next
Thanks. That was a
question
great
from
question.
Moa. Moa. What will you do if you lose 10 days success? What would you do if you lose 10 days, 0.5% from your balance?
Um,
What
I
will you do
I
if
don't
you
know
lose?
what that question means. I'll just take the first part of the question. If what happens if you lose 10 days? I mean, I don't know if that's a 10-day streak. I'm assuming so, but I mean, anytime that you're losing 10 days in a row or you have 10 losing days in a month, I mean, there's only really 20 or so trading days in a month. Whatever you're doing in the markets, it's your strategy that you're implementing is not working in the current market environment. And instead of going in there and fighting the market and continuing to do what you're doing, stop trading, take a step back, evaluate why your strategy isn't working in the current market environment. But I mean, you should be coming to that conclusion well before you have 10 losing days in a row. If it's Monday and we got a fresh week, if it's Monday and if I lose on Monday, Tuesday, and Wednesday, that's 3 losing days in a row. It should be very eye-opening that whatever I'm doing is not exactly working, and this might not be my week. And I'd be really thinking about taking Thursday and Friday off, or um, at least just watching the markets and maybe paper trading or using a practice account that everybody at TopStep has. But I mean, 10 losing days in a row should really be standing out to anybody.
Right. Got it. This one is from Sophane. Sophane, what's the best risk management plan for the 100K account?
Mm, well, capital preservation, number one. I mean, that is protecting the money that you do have or protecting the account balance that you are at is number one. 100K, okay, so we've got a $2,000 daily loss limit and a $3,000 max loss limit. So on a daily basis, we're basically saying you can risk up to 2/3 of your account, that max loss limit. Um, for those traders in that account size, and in the example of this question, you have no business risking $2,000 in a day unless you're putting up very big winning days and you've grown that account, be it a trading combine, an express funded account, or a live account. To risk 2/3 of your trading account, the $2,000 daily loss limit compared to the $3,000 max loss limit is not indicative of success. It's way too much money to be risking on a daily basis if that's where you have to work with. So I wouldn't be risking 2K and 100. I wouldn't be risking 2,000 in a 100K account unless I was, and unless I had a nice account balance there. Also, you think about the profit target for the 100K too. I mean, if you're losing 2,000 on that and you were on your way to the profit target, that's a big percentage to be. That's a big haircut towards your profit target.
All right. Next question is from Matt. Now, here's somebody from Discord saying, regarding payouts, This one has a personal name on here. I'm not sure if I want to say this, but can you tell us if somebody is supposed to get a payout and possibly they are it's late. Let's just say that.
Uh, if someone's supposed to get a payout and it's late.
And it's late. Any reasoning behind that? Or I know that sometimes um, the trader numerous times has not filled out the paperwork correctly.
Oh, it sounds like someone might be saying that they requested a payout and they haven't gotten their money yet. Right now, we are running slightly behind, unfortunately, on the payouts. We had paused our partnership with a certain entity that we were using for those payouts. We've gone back to sending ACHs and bank wires for the time being. Where we're running into issues, and we're working on these issues, we've added another bank that we're going to start using, and we're looking at other longer term solutions. But we're limited to how much money that we can send on a daily basis, and we've been hitting that daily amount. So things have gotten backed up a little bit, but this is the number one priority for all of TopStep right now, is to work out that problem and get back to better than baseline before, when we were processing payouts every single day and everything was coming on time. So yeah, unfortunately, we're a little backed up right now, but we are working on that very swiftly. And I'll reiterate, it's our number one priority right now for the organization to get back on track better than ever before with those.
Better than ever. There
While
you
I'm
go.
talking about that, though, we do, people can send payout requests, every day. The payout policy have 5 winning days of $200 or more, and you're eligible to request a payout. So we don't have anything goofy where you can only make one payout request a month or once every 2 weeks. It's whenever you're eligible for the payout, you can ask for it. And we love paying out our traders. I talk about it on Shoulder Tap a lot. Everybody should be paying themselves. As you're profitable in your account, take a little bit out. We allow you to take up to 50% of your account balance via payout. Doesn't mean you have to take 50%. If you have a good day or you have a good week and you're eligible, take a little bit of money out. It helps so much with money management, when you can actually make that money tangible. I personally, in my own trading, early on had problems respecting the value of the dollar, and treating that account balance number, my P&L on my screen, as real money. And once I started taking payouts, that changed, because you get a little bit tighter with your dough.
Right.
Um, we've talked about it on Shoulder Tap too. I'm going to go on a little tangent here, but it's like when you're up good on the week and you're coming into the end of the week, and let's say I'm up 3 grand on the week coming into Friday. I want to trade on Friday, and I don't really see anything. I might see a trade I want to take, but I'm a little questionable about it. From a money management standpoint, I'm going to think, you know what, I'm eligible for that payout right now. Uh, I don't feel too strongly about this trade. I'd rather just take a payout right now for, half of the money that I'm up on the week, call it 1,500 in my example, and I'm not going to, take this trade and wipe out some of my profits from earlier in the week. And that really is how I saw it for me. And I see some of our better traders in the live accounts, they're regularly taking payouts. It might not be every 5 days, but do take payouts, and take them regularly. You don't also, with payouts, don't say I'm going to wait till I hit a big round number, because a lot of times that big round number might not come, and you don't want to hold off for that. Pay yourself, even if it's, taking a $200 payout on a $20,000 account. Do that. Take yourself out to a nice lunch or something like that.
There you go. All right. Next question. Let's see here. Nasir, what advice would you give to people who overtrade? Like there's been times when I'm up $1,500 and I hit my MLL. Today was such a day. I don't know how to get out of the markets.
I think people have that problem for a number of different reasons. Our job as traders is to find good trading opportunities during the day, and if we don't see them, don't take trades, don't make trades. Your job is not to trade, all 23 hours that the market is open. Everybody's got to put some limitations on themselves and have the discipline to stick to it. If you're over trading, like I said, there's a variety of reasons why someone might be over trading. There's a personality, there's the gambler personality, and a lot of people that, have that gambling personality come to trading, and they're always seeing this, action and stuff. You're seeing the market move around and you're thinking that there's something there. You might have to put some limitations on yourself. And I would recommend 2 limitations if you're over trading. I'd actually 3. Think about the time of day that you should be trading. I talked about that in one of the first questions that we got. The best time of day to trade, I think it's the 7 a.m. to 11 a.m. Central Time window. The other thing would be set a limit on how many trades you can make per day and stick to it. It's easier said than done, but you got to stick to it. And people underestimate the level of discipline that you have to be successful in this industry. Really overestimate or underestimate the amount of discipline that you have to have. I can speak personally, like when I've been in cold streaks and I'm not making money and I'm losing money, go back to I give myself 1 trade per day. And that's all I take. I don't make exceptions to it. But if you're over trading, say I've got 3 trades that I can make today, and you're going to make them count. You're going to stalk the market, and you're going to find good trade location, and you're going to manage those trades well. We don't want to be cowboys here shooting from our hip all day long because the market's going up and down, back and forth. We want to be very meticulous with the trades that we're taking. So that's the second thing. And then the third thing, in line with the question, is if you're up money on the day, there's nothing wrong with continuing to trade if you see opportunities in the market. Do that. We're here to take money out of the markets. But if you're up good on the day and you continue trading and you start giving back some of that money, set a limit on how much of that, what percentage of my P&L high for the day am I going to keep? We talk about it a lot in Shoulder Tap. If you're up significantly on a day, like let's just say a significant winning day for you is $2,000, you should probably stop trading and walk away if you give back half of that and you find yourself only being up $1,000. $1,000 is a lot of money to make in a single day. There's not a lot of professions out there where people are making $1,000 a day. So setting limitations like that, keeping half of your P&L high for the day. And that doesn't so much apply to, oh, I'm up $200 on the day. If I give back 100 of that, I got to stop. That's not significant profits. Yeah. Maybe for someone trading micros it is, but keeping a percentage is a good rule of thumb that everybody should have. And as those profits become more significant, keep more than half. If $2,000 is a big winning day for you and you find yourself up $5,000, keep 2/3 of it or something like that.
Right. Hey, Mick, real quick here. We got some markets that are taking dives here. Nothing like the Santa rally, probably like the Grinch dump, if you want to call it here right now. We're looking at NASDAQ right now, 16,907. And continuing here, I've got my 15-minute candlestick here. These are my 15 minutes.
Wow.
As I just do that. So that's a NASDAQ. Also taking a look here at our S&Ps. S&Ps right now. Same play, 47, 87, 50. So we have taken a good falling here. Also in the gold running south also here at 2064.20.
Jeez,
So,
wow. I gotta say, I had good timing on Tuesday when I peeled off some of my Russell on the close before that technical sell-off on Wednesday, and then peeled off the other half a unit right before getting on here, actually. So I'm feeling good about that.
You know what, Mick, one of these days, we're going to get you on here and you teach us about this Russell. It is, you can trade it here. There are maybe a handful of people that do trade it, but would like to get the, remember on the trading floor, the Russell, if you wanted the Russell pit, it was like the rope.
I was board of trade guy on the grain floor. I wasn't over at the CME.
Oh, okay. Well, that was the signal. The lasso. It would be the lasso. I need the Russell. I need the Russell.
I'm gonna get a little bold here being on TV, but the nickname for Russell is Russell the Love Muscle.
Wow. Okay.
Russell the love muscle.
Be careful of those
Little
market orders. Yeah.
little dirty joke there. But I don't think I've ever even traded the Russell before, Eddie. Honestly, I put something on there earlier in the month because I liked that we were on shoulder tap talking about the equity indices and how they were kind of coiled up sideways, and the Russell
Right.
was the first one to come break out to the upside. So I took that as the leader for of the four between the S&Ps, the Nasdaq, and the Dow, and obviously Nasdaq's made new contract highs since then, but it was a good trade on the Russell longer term.
All right. There you go. All right. Next question from Racer Joe. Racer
Racer
Joe is
Joe.
Racer Joe. New and trying to figure out the risk or setup using a 50K. Basically, what Joe is asking, what's a good profit to start out with? Um, I know that we talked earlier today regarding a foundation, a safety net, a cushion.
Uh, I mean, again, not a one size fits all question, depending on what you're framing out in your risk reward. I mean, for someone who's new to trading, making $200 could be a good profit target. But if you're looking for a bigger move, then maybe $1,000 for a good profit target. You certainly don't want to go over, whatever's halfway to that profit target in the account, because the consistency in our program, the consistency rule, but I shouldn't say rule, the consistency parameter. Um, but it's really, based off of, if it goes to your profit target, you got to look. So I have a better answer for this. There's a lot of people that are out there that really just say, I'm going to place a trade and I'm going to risk $100 to make $200, and that's all they do. I do not believe in that one bit. I think traders need to look at the charts and have an idea of where they think the market can go to. And if the market goes to that area and they put something on and they took it off where they thought it could go to, that's a good profit target because you framed out the trade. You had an idea of where you thought it could go to. You took risk, it paid off, and now you're exiting where you thought the market could go to. That's what you should be basing your decisions off of, or your opinions on what is a good profit target. You can kind of also look at that backwards too. If you're in a 50K account, you got a $1,000 daily loss limit, a $2,000 max loss limit. You can work backwards and say, I should be only risking, X per day or X per trade. And if I'm only risking, X amount during a day or X amount per trade, then I should be making at least double that on the profit side of things. And that goes back to what's a good risk reward. And I said, minimal 1 to 2 1 to 2 risk reward, 2 to 1 risk reward.
All right. I'm with you on that one. Next question is from Trina. For the
Trina.
50K combine, trading micros seems to be the best way to go. Are we still locked into 5 contracts with micros?
Yeah, the way the risk parameters are set up on the platform is 5 contracts is viewed as 5 contracts, whether it's micros or minis. I know that those contracts are fungible, and what fungible means is I could buy 10 micros and then sell it out 1 mini, and it would negate my open positions, but that's not the way our risk settings are set up on these platforms. So yeah, you're still limited to, 5 contracts is 5 contracts. I personally think for our traders, you should just be trading one or the other. If you're trading micros, stick to micros. If you're trading minis, stick to minis, and don't get mixed up in between. Doing both. I certainly think if I'm only trading minis, I would only really be going to trading micros if I was in a drawdown or something like that to still stay in tune with the market. But, my risk reward off trading those micros is going to be minimal. If I'm making money, I'm not making much. If I'm losing money, more importantly, I'm not losing much. What else you got?
I got another question from Pete. Why does Topstep stop a trade at 10 after and not closer to the close?
Well, For a period of time, the close was at 3:15, and we wanted people out 5 minutes ahead of the close. That gave us on the risk team time to ensure that on all the platforms that we've got traders on, we had a little bit of a buffer to get out of those positions and flatten everybody. If anything was left on, cancel working orders. So that's where the 3:10 comes from. Stocks close at 3. I don't know why anybody would be in the markets after 3 o'clock. They're not moving around. That's just that's the time. And there's always that halt in the S&Ps as well. So before the 4 o'clock close.
And one thing too is it's best to close out. I mean, if you're waiting for that last second before hoping the market goes your way, it's probably not gonna.
Y-
You know, be
Yeah,
flat. Be
your
flat.
meat and potatoes isn't going to come after 3 p.m. Central Time. I promise you that.
Right.
Get
All right.
out of there.
Next.
Have a nice day after that.
Right. James is asking. It's been said that 90% of traders trading at the open lose money. What are the stats regarding P&L morning versus afternoons from Top Step traders? Mick, what have you been seeing from those that trade morning and those that trade the afternoon?
Yeah, I can't speak to the stat around the open, but 90% sounds pretty high. Everybody's trading different strategies on different time frames. I did go back again, going back to that one question that we had earlier on. I don't like trading around the open. I don't. I see people get cut to pieces doing it. So I actually, I don't know if the stat's 90%, but I don't disagree with that. It certainly could be because that's just a turbulent time in the markets. I
Right.
like sitting on if I'm trading equities, I like sitting on my hands until the opening range is over. People have different opinions of the opening range. They might say it's the first minute after the bell rings. It might be the first 5 minutes. I call my opening range is the first 15 minutes. So that's 8:30 Central till 8:45 Central. And I also part of this question, which is it's a good question. I think the real, juicy time to be trading is from 7 a.m. to 11 a.m. That's again when the volume comes in. Come 11 o'clock Central Time, everybody in New York's going out to lunch. 12 o'clock, everybody in Chicago's going out to lunch, and then the afternoon's always lower volume. I want our traders, and I've found our traders to be doing best when they're in there participating, when the bigger participants are in there, when the most volumes there, when, like I said, those big boys and girls are in there pushing the market around one way or the other.
Oh, lunchtime, baby, lunchtime. Joe, hey Joe,
Speaking of lunch, oh, go ahead, Eddie. Sorry, I didn't know you had another one queued up.
no,
Let's do it.
I got a bunch, but you were saying go ahead. Lunchtime, what?
My lips are still stinging from these tacos I got here at at Sellers Market down in the basement of the Board of Trade building. I didn't have a lot of time for lunch before hopping on here, so I went down there for a couple quick tacos, and man, I'm still feeling that salsa on my
Spicy,
lips.
spicy, spicy.
Yeah, I like spicy.
I know you do. I was going to say, wait a minute, that must have been really hot.
Yeah, yeah, it was.
I gotta join you guys for lunch one of these days. Catch the train up there and
Do it, do
check
it.
out the office.
The old stomping grounds. Come on in. Yeah, as a
Oh
reminder,
yeah,
we're up in the Board of Trade building here. We call it the trophy room or the risk room. But
maybe
yeah,
go to
Topstep.
Jack and grab a few cigars and see you guys.
I was thinking about going over there and wishing a couple people Merry Christmas, Happy Holidays after the close today, as a matter of fact.
There you go. All right, cool. See, that's how nice of a guy Mick is, people. He's a genuine article. All right. Here's a question, and sort of a different side of what is being talked about a lot. Joe, I really don't get why people have multiple accounts rather than just one. Well, Joe, I'm with you on that. But Mick, why do people have multiple accounts, and what's the method behind the madness?
Well, I'm with Joe. I'm with you, Eddie. I don't get it. You know, I like focusing. It's easy to get distracted with trading, and I think the best performance comes when you've got your attention focused on one thing. I do get it though, as far as people that come to our program, when you can leverage a trade copier and we see it all the time, here on the risk team when we're watching XFAs. If you do, I mean, if you're doing a one lot in each of three accounts, you got three on. You could go slap a three lot on in one of those accounts. So I don't know. It's just a different way to skin the cat, honestly. It is what it is. It's what we do and what we offer. There's people out there that want it, but people like myself and you and the person that asked this question, I don't really understand it too much. I'd rather just focus in one place and trade that one account. But we offer it. The offer's used, and people seem to like it. I do think it's exciting when I'm talking about people in XFAs, and they're up 10 grand and not only one but three accounts. So it's just a different way to add leverage. Honestly, that's what it is. And I suppose, instead of putting a three lot on in one account and getting close to my daily loss limit, I could put a one lot on across three accounts and only go a third of the way to the daily loss limit. So there can be benefits there depending on how people want to operate, but that's a relatively new thing.
All right, just a
Nice,
little
nice
go ahead.
bounce back in the equities I'm seeing here.
You got the buyers going, hey,
That
wait a
sell-off.
minute. They're coming back from lunch right now going, what the? You sellers, shame on you.
Yeah, almost halfway back in at least the
Mr.
NAS
Crude
and the
bringing it back
S&P.
here. Yeah. See if we can get a chart up there here real quick, and we can run over these real quick. I know that we're running
Why
out of
not, for the
time.
viewers? We got more time for questions. Pile in the
Right.
questions and we'll get back to them after we show the markets.
Right. All the way from let's see, NASDAQ making a run here, getting back on the bull after 16,896. We're 16,956. That's I tell you, but one lot on there, riding that all the way there would be sweet. Nice going there in the NASDAQ. Take a look. S&P is probably doing the same. Yep. Looks like the same exact chart. You want to put up there the ES. Very well. Good job.
High correlations.
Low here, 47.84. Yeah.
Can't help but comment when we were on what was it, Wednesday, and we were watching this technical sell-off and whatnot. I had mentioned, if you're on a higher time frame, sell-off like this sets up a good buying opportunity for anybody that's looking for a longer term play. And sure enough, the lows were in that Wednesday afternoon when we were all on watching and talking about that, and we've had a nice move up from those levels.
Right. And then gold making a minor, trying to make a minor recovery here. Back up.
Hey, you trade gold, don't you?
Gold and NASDAQ accidentally.
Accidentally?
Well, you see, I'm a scalper, and I'm looking at the dome and I'm seeing movement on the dome, and I'm like momentum on my 15-minute candlesticks. And sometimes I'll see a candlestick making a move and saying, you know what, I'm going to get in here. Just looking at the candlesticks.
No.
And be honest with you, I mean, I think I'm 5 for 5 accidentally trading NASDAQ. So
even a blind squirrel finds a nut from time to time. But 5 for 5, that's pretty good, man.
Yeah. Well, I mean, I'm looking for patterns, and I guess I don't know. I'll stop.
What does it matter? It shouldn't matter what the product is if you're looking for patterns and you're a technical trader. I mean, the nice thing about being a technical trader, and granted, different markets have different movement tendencies and stuff, but technical analysis is something you can apply to everything. So I guess if you're looking at a chart and you see something, what does it matter what the derivative is?
As long as you're winning trades, I don't care if you're trading with your feet. Winning trades are winning trades. All right. We've got about another maybe 10 minutes here. We'll see what we can get through. Damien's asking, Mick, at Hoagland and Patak guy often tell us to go for base hits rather than home runs. I mean,
yeah,
I preach that too. But you say longer hold times. All right, longer hold time implies larger gains with one trade. Well, I mean, I think what Mick is saying is an add-on to the base hits. Sure, you want to aim for that base hit, small profit. But when markets run like we just saw, if you've got that, if you're standing on first base and that market's running in your way, that single's going to turn into a double. That's what I think Mick means by holding longer times. It's moving more. Okay, now that
Yeah.
doubles a triple. All right.
No, I'm happy Damien brought this up because, yeah, I could see how that might be interpreted as talking out of two sides of my mouth, but I'm all on board for the base hits. I only look for base hits. Trading on a higher time frame, when I think of home runs, I think about people putting size on, big size, max leverage that I can. I don't do that. I like trading smaller than I can. Less pressure that way, freer mind. I can be more flexible. If you are trading on a higher time frame, I talk about don't add into losers, but if you have a higher time frame in mind and something goes against you on your average price, it doesn't go without saying you can't, put a little bit on if you're looking at a certain buy zone or buy area, and that could be, that could be relatively large if you're looking for a higher time frame. But please don't mistake me saying, catching a bigger piece of the trend is really looking for a home run. It's all about the risk reward and, framing out. I'm risking this to make this, but I don't go looking for home runs. I rarely get them. If I get them, it's because the market gives a nice impulse in one direction or another. But I trade smaller than I can, and that's just my style. So base hits are great. Look for the base hits. Because we talk about the base hits because when you're looking for base hits, that's where we can see consistency and profitability. If you're always going up to the plate, swinging for, hitting the ball over the fence for a home run, you're going to strike out a lot. And, that's where I see traders make $3,000, lose $3,000, make $3,000, lose $3,000, and they don't get anywhere at the end of the week, the month, the year. It's the people that are consistently profitable, and that can add up over a long period of time to a nice secondary income or primary income, whatever it is for you.
Right. And yeah, I completely understand exactly what you're talking about.
You know what I'm talking about?
You know what? I know what you're talking about. Huh? I know what you're talking
Oh, I
about.
can't do it as good as you. What are
Uh,
you talking about?
you're
What are you
Italian,
talking
right?
about? Yeah, got a little Italian in me.
Hey, bada bing. Um, you know, mm, the idea is whatever the market gives you, you take. Right? And don't be upset about it if it doesn't give you what you want. Um, go ahead. You took a breath. You're going to say something?
No, I was going to say well said because a lot of people try and force things, and usually the people that are trying to force things are those people looking for home runs, and they're throwing big size on, and it doesn't always work out. The problem with that though is you get very excited when you have one of those big winners, and you think you can keep doing that, and you'll remember the one or two times out of 10 that it works out, and then the other times, you've just washed away all those profits. So.
And honestly, Mick, I can't remember the last time I put a trade on and said, "Man, that was a home run." Honestly, I cannot remember because that's the least of my goals and targets.
Mhm.
Gosh, I get looking for a single, I get a double. I am ecstatic, right? I'm
Yeah.
like, wow, it
Yeah.
gave me more than I wanted.
Yeah.
Yeah, keep that in mind, folks. Um, all right, got about another 5 minutes here. How about this, Mick? Chloe is asking, what can help people's mental um, after a big loss mentality? Sort of like
Really
the
good
mindset.
question.
Yeah,
Really good question. We all go through that. We all need to kind of, check ourselves and take care of ourselves, heal some wounds, lick some wounds. Take a little time off. Do something nice for yourself. I had a very good habit of when I had a losing day, I would go take myself out to a nice lunch. And then on my winning days, I was like eating ramen noodles out of the office in the microwave. But treat yourself to something nice. We need to take care of ourselves.
right.
Um, I hear a lot of stuff about psychologically about, oh, you idiot, you don't want to, call yourself a dummy in any way, shape, or form along
Yeah.
those lines. So do something nice for yourself. Take yourself out to a nice lunch. That's what I did. Um,
Right. Don't harp on yourself exactly, Mick.
I,
That's the worst thing you can do. You know,
yeah,
we're trying to build confidence. We're trying to
yeah,
pat ourselves on the back. We're trying to
but
move forward.
to answer the best way I could answer this question though is doing something proactively to ensure that you never get to that place. And that's really framing out the trade. I know I brought it up a few times, but like if I'm looking at and assessing every trade before I take it, I know where I'm getting out if I'm wrong. I know where I'm getting out if I'm right. Those are two outcomes, unless I scratch the trade. Those are really the two outcomes. I'm going to have a loser or I'm going to have a winner. And if you predetermine where that's going to be, one, it makes it easier to move on to the next trade if it's a loser. And two, I am already assessing the risk tolerance that I have on that trade, which means if my risk tolerance does, if it comes to fruition and I take a loss on that, it's not going to bug me. It's not going to bug me because
Right.
I knew that was already an outcome. So if you can do that, you're going to get in front of the emotions even happening. And framing out those trades removes so much emotion if you can already mentally process the outcome. So that is what I would suggest to the person that submitted that question is frame out those trades and you're never going to be in a situation like that.
Right. And the thing is, we all get through it. How many of us have had a relationship that sort of fell apart? Right. I mean, I think we all have at some point. Um, the question is, how you doing now? Time heals all wounds, and
Yeah,
that's
usually it does. And for all the hard things that people go through, traders go through, um, I feel like people always end up better on the other side. Might not be the case with trading, but in general in life, hardships, you come out a little better on the other side usually.
and another thing too. I mean, if you're having bad days trading, bad weeks, um, prepare yourself, your mindset. I mean, the mindset is the first thing that should be checked every morning before you even turn on your computers. And if you can honestly say, boy, I'm under the weather like I am here today, or, I can't focus right. You better think twice about putting an entry in for that. So be very careful, but positive mental attitude. Look it up.
Yeah.
It's Napoleon Hill. All
Yeah,
right.
everybody's got to regroup. We all go through drawdowns in trading. You take a little time off, like Eddie said, the time heals, regroup, think about what you could have done differently, and come back with a realistic approach to,
Right.
avoid that in the future. That's how traders develop. You make all these mistakes. As long as you're learning from the mistakes and not replicating them, you're going to have a much smaller set of mistakes that are to be made or could be made, and then don't replicate those. And that's how people get better at trading, not
You got it.
replicating the mistakes because they're going to come.
You got it. All right, Mick. I appreciate you being here with us today. Special episode. For those that did not get their questions answered, we will save these. Gosh, I had a bunch of boy, Mick. You had a ton of questions here.
Can we
Uh,
squeeze one more good one in before we leave? I think we got 5 more minutes.
I think we got about a minute here.
One more for the people.
All
I'll be
right,
quick.
for the people. All right, Mick. What's your favorite market and to trade and why?
Whichever one's got a setup, because I don't get married to anything in particular. I don't at all. Whatever I see a good opportunity for on the daily charts is the one that's in my crosshairs.
All right, next question, real quick here from Roy. Roy the Toy Boy Jenkins. Does Mick dress incognito when he's in public now that he's famous? Um, he
Well,
wears
I'm
a
always
fake
hiding
beard.
behind the mustache.
You, that's the I've seen that mustache before. All right. All right. All the best to you and your sweet angel of a daughter. For this is going to be her second Christmas?
No, this is her first
First.
Christmas. Yeah, she's 10 months old now.
Wow.
Thanks. She is a sweet angel. Shout out to you, Gianna. I love you, baby.
There you go. There you go. All the best. Make love you too as a brother.
Love you too,
Please,
Eddie.
all the best, and we'll catch you back here next week. You're going to be here next week?
Oh yeah, working Tuesday through Friday. Eddie, give
right.
my best to Michelle. Merry Christmas to you guys and happy holiday to everybody out there watching. Be safe, have fun, be merry, and we'll see you next week because we're not taking off. Top Step TV is on. So Tuesday morning, I'll see you on Shoulder Tap. Hope everybody tunes in.
All right. Well, Mick, tune in for Power Hour. I heard Santa might make it here today.